joined now by Chief European Economist at RBC Capital Markets, Jens Larsen. Thanks so much for joining us.
Thank you.
Now, before the break, you said that you were slightly disappointed by the kind of downbeat words from Jean-Claude Trichet. But I'd like to start with what happened at the Bank of England today, because there was an expectation that there was a possibility of a little bit more intervention, a little bit more QE. Rates remained on hold and not very much else happened.
No, not very much else happened. And I think you say a little bit more QE. I think that the idea that the Bank of England is going to do a little bit more QE in response to a little bit of a deterioration in the outlook is exactly where the arguments are not working for some. I think the Bank of England will do more QE if the outlook deteriorates very sharply. Of course, it has deteriorated already in the global outlook and in the outlook for the UK. But I think the bank will keep the QE shot, if you want, back until there's a really big event to react to, either a catastrophic event in Europe or an even sharper slowdown in the macroeconomic outlook.
And how much do you think that George Osborne and his policy and the Bank of England's policy are on the same page, if you will, at the moment? I know the Bank of England is separate, but when they're working, when their ideas are coinciding, then that's sort of better for the UK, isn't it?
I think the fact that the two things are working as a coherent macroeconomic strategy is really important for the bond market's confidence in the outlook for the UK. And I think it's very clear that if the economy slows more sharply, then the answer is further quantitative easing. It is not a change in the fiscal plan. That's the strategy. You may not like that. You may think that there's a better way of doing it, but it's very clear that that's the strategy that both the bank and or at least the governor and certainly Osborne are playing according to.
And of course, the markets like that certainty, don't they?
They like clarity, I think, and of the two authorities working together. And that's, to my mind, is the contrast with the euro area, where you don't really see that harmony between the authorities.
Okay, absolutely. Well, if we just take a look at what happened today at the ECB, there was no change. Did you expect that they might lower rates? And possibly a better question is, should they have raised them in the first place?
I think, well, these are two different questions, actually. So I wouldn't have raised them in the first place if you had asked me for my opinion on what should have been done. They did, and I don't think at this point it would make all that much difference to lower them. And I think the hurdle for them to lower rates is still fairly high. They clearly changed their outlook now, and a further deterioration in the macroeconomic outlook could lead to a cut in rates.
But a cut in rates wouldn't necessarily stimulate growth, which is what we're after here.
I'm sure it would stimulate growth, but it wouldn't necessarily stimulate growth, ease financing conditions, ease monetary conditions in the part of the euro area that really needs it. That's where your starting remark is really important. Financing conditions in the southern periphery of Europe, they're really tight. A cut by 50 basis points in the ECB rate won't do very much to do that. The repair of the monetary transmission mechanism, the purchases under the SMP, that's, to my mind, is the way to go about doing that.
And it is really the ECB's role in these peripheral nations, specifically the bond buying, that has been really important, hasn't it?
It's certainly the thing that is holding things together at the moment. Of course, eventually, I think it's very, very important that the EFSF comes on stream and does this. It is a conflation of monetary policy and fiscal policy, and I think the ECB quite rightly would like to get out of that role. But the ECB's demonstration that they are there, they are the ultimate backstop, is really important.
Now, one of the big risks when people are looking at what happened in 2008 after Lehman's is the idea that interbank lending would freeze up. Can you see that happening, or do you think, again, that the ECB's role is crucial?
The ECB's role is clearly crucial, and at some level I absolutely agree with President Trichet's assessment that given there's so much liquidity provided, then certainly we're not going to get an exact replay of what happened in 2008. The response to the 2008 incidences, they are all still in place and should prevent that from happening in exactly the same way again. But that doesn't mean that the banks are going to feel unconstrained. It could still mean that the banks at some point are going to face much tougher financing conditions, and that in itself will add to the risk of a credit crunch, which could have big impact on macroeconomic activity.
What would it take for that to happen? Does there have to be another event for that to happen, or could we just be on a slow burn to this?
I think we could be on a slow burn to this. That, of course, is materially different from a Lehman-style event, where a Lehman-style event has a much bigger impact on confidence than you see than the sort of slide towards much tighter credit conditions. So I think it is very important that the authorities take preemptive action, and I think the whole nexus of financial sector reforms, the recapitalization of banks, this is why one needs to get on with that and not hang around and wait for things to get really bad.
Okay. Jens Larsen from RBC Capital Markets, thank you very much indeed for joining us.
Thank you.